Good morning. I am here today with Evangeline Scott, who is my preferred lender, and I have some questions about loans that I thought you might be interested in hearing the answers about as well. And so Evangeline has agreed to join me today. The specific question that I'm wondering about is I keep hearing on the radio all of these different companies that say if your rate is above 2%, you should refinance, even if you just refinanced within the past year. And I'm just wondering, how can these companies make those claims, and is that really true?
It's a whole other level of frustration for me when I hear those things, and even from an ethical standpoint. So, should you refinance? It's not just always a yes or no. People will typically have the thought process of if you're saving or going down 1 point, then you should refinance. But it's not necessarily always true. So to answer the first part of your question of how are they saying that if your rate is above 2%, you should refinance? In general, right now, as of January 6th, we are basically looking at for a standard 30-year fixed, depending upon if you're paying a little bit to buy down the rate or not, you're going to typically be around 2.25 to maybe 2.75, 2.875, depending upon the loan to value and or credit score and the overall scenario. In a 15-year format, you can absolutely be lower than that, but when we talk about rates, it's a little bit tough on our end because then we have to go into APR and everything else, and we want to really go that direction because that's confusing. It takes a heck of a lot more time, right? So it's not necessarily if your rate is above 2. Now, if your rate is above 3, absolutely 100% warrants a conversation for sure. But I also have clients where, depending upon how long they have left on the term of their loan, when I look at the refinance and the recapture rate period, I've had clients where I've said, yes, it sounds, sexier to have a 2.25% interest rate. Of course. However, if we're restarting over and if you're paying more principal now, then when we run an amortization schedule or something of that nature, it may not make sense for them to go ahead and refinance. The challenge ends up being, from what you're typically hearing, is you have entities that have call center setups. And so they have these, in essence, teaser kind of ads that go out. People call into the call center. They get some half information, so to speak. A loan process gets started. And then they're like, oh my gosh, at the end or when they get their closing disclosure and nothing was necessarily properly explained to them. Because sometimes I'll get those calls of, hey, my friend is having this horrible experience. Can you jump in and help? Or can you look at this? And a lot of times as well, people will be being charged points and they aren't aware of it. And again, me personally, I like to go over that with a client and look at the difference again of a recapture rate period and what is that going to do for the overall process.
Okay, great. So it sounds like, just like everything within the real estate business, there's variables that must be considered. It's not just a question of, oh, I'm going to choose just a rate or whatever it is. There's other things to be considered. And it sounds like you take, and my experience with you has also been, that you take the educational role so that you explain to people so that they're not surprised as they may be when they start the process with a call center.
Correct.
Okay.
I do tease that I tend to be a little bit more motherly. I'm obviously nerdy. I deal with numbers all day long. And so for me, I really do like to look at the overall process. And again, there's been many times where I talk somebody out of doing something because it's not necessarily the best thing or doesn't fit what their goals are. Again, just to refinance just based on rate, if you're only going to keep the home another 2 years or you have very specific plans, it may not make sense.
Gotcha. So when you're dealing with the call centers, many of them are national companies, if I understand it. And then they have a specific person that's licensed for the state of California, which is where we are. I didn't say that ahead of time, but yes, we are in the state of California. So do the rules vary when it's a national lender who is operating in California versus a just a California lender? Doesn't matter.
The rules in what regard?
In terms of fees.
Not necessarily. I mean, different areas, your fees are going to vary a little bit. Typically, that's more in regards to the title fees, though, depending upon the scenario.
Okay. Okay, great. And so we started out with the question obviously having to do with it's more than a rate. What are the other things that a buyer should be considering when they're shopping for a loan and that they may not be thinking about? What they don't know that they don't know.
Yeah, one of the biggest things, and I think we'll see at least for me, there is going to be more of a push on the education side of debt consolidation as well. I am not necessarily a fan of let's use your house as a piggy bank. And at the same time, when there is a pandemic and uncertainty in the world and debt that you're paying a much higher rate on versus what a mortgage rate is, the question that I would say when somebody is considering a loan for a refinance is, what are all my options? Not just lowest rate, right? Because everybody wants to say, I'm shopping around, I want the lowest rate. Okay, well, you can have the lowest rate, but that might be at higher fees, right? Again, what's the recapture rate period? What's your goal? How long do we think we're going to keep this particular property? A great example, I chatted with a client yesterday. They went ahead and just called the current loan servicer, which of course, call center, happy to just go ahead and refinance, not ask them any questions about what their goals were or anything else. They of course, paid those closing costs that they wrapped into their loan. And that was less than 2 months ago. And they did a rate and term refinance, rate and fees higher than what mine would have been. Yet in chatting with them and goal of expanding family and wanting to keep the home as a rental property down the road because they're going to want to buy another property, and we've got this student loan and we need to start saving for retirement. We went in depth in less than a 20-minute call, and really they should have done a cash out refinance at that point. Cash out refinance from VA to conventional. They could have taken care of, in essence, all of their debt, taken some funds out for the new purchase as well, still been below what they were going to be at, and then had a better overall scenario. So now, unfortunately, we're going to do that. Of course, fortunate for them, yet had we had that conversation 2 months ago, that's the direction I would advise them, again, by asking the questions of what are their goals and their plans. So I think sometimes, it might even be for the individual. It's tough because I look at it and go, gosh, I think everybody should be having those conversations. Yet from a business standpoint, if you call and say, I want this, can you in essence sell me this? And the person says yes. Well, then from a consumer standpoint, again, maybe it's let's think and talk about what are our goals for the property, what are the plans and every other aspect before making that call.
Gotcha. You talking about that reminds me of about a month or so ago, a past client of mine who bought a home with me. They said, my lender, my current servicer, they say that we can refinance my loan and it seems like it's going to be super easy and my payment's going to go down. And I said, okay, well, tell me a little bit more. And it turns out that I didn't remember this, but it was an FHA loan and they were trying to talk them into refinancing into a new FHA loan at another rate. I was able to explain to them, because we have a trusted relationship, that one of the things they want to do is get away from the MI that's associated with FHA, because that's going to keep their payment higher than it should be, even with a lower rate. And they really appreciated the fact that I was able to share that, that perspective. So I value what you are saying, and I'm sorry, a screen flashed up there that I wasn't sure what to do with there. So anyway, I value the relationship that matters between the realtor and the lender. If you have a lender that you trust, ask them the questions. If you have a realtor you trust, ask them the questions and listen to the answers. You, as a consumer, will be able to determine if the person you're talking with is providing value to you or not. So this is Evangeline Scott, and she is located in Folsom, California. I am Sheryl Smith with Smith Real Estate Services, located in Gold River, California. And if either of us can help you, we certainly are happy to. Thanks for listening.